March 27th, 1980, Dallas, Texas. In a quiet penthouse office, two brothers stare at a phone that will not stop ringing. On the other end of every call, a margin clerk, a banker, a broker, each one demanding money the brothers don't have. By sunset, they will owe more than $1 billion. By the end of the year, the United States Congress will summon them to testify. This is the story of Bunker and Herbert Hunt, the richest brothers in America, and how they tried to corner the entire world's supply of silver. To understand how two men nearly broke a global market, you have to understand where they came from. Their father was Haroldson Lafayette Hunt, known to everyone as H.L. Hunt. In the 1930s, H.L. Hunt walked into the East Texas oil fields with almost nothing. He left as one of the richest men in the world. By the 1950s, his oil empire stretched across Texas, Louisiana, and Oklahoma. Time magazine called him the wealthiest individual in America. But H.L. Hunt was a man who did not trust the modern world. He didn't trust governments, he didn't trust banks, and most of all, he didn't trust paper money, the dollars in your wallet, which he believed would one day be worth nothing. He raised his sons to believe the same thing. Nelson Bunker Hunt was the second son. Quiet, heavy-set, a man who preferred horses to headlines. His younger brother, William Herbert Hunt, known simply as Herbert, was sharper, more cautious, more strategic. Together, they would inherit billions. But money to the Hunt brothers was never the goal. They were searching for something else, something their father had taught them to fear losing. Permanence. In the early 1970s, the world was changing fast. The Vietnam War was draining the American economy. Prices were rising on everything: food, fuel, rent. Economists called it inflation. To ordinary Americans, it just felt like the dollar was shrinking. And then, in 1971, President Nixon made a decision that would change the world. For nearly 2 centuries, the American dollar had been backed by gold. If you held a dollar, you could, in theory, walk into a bank and trade it for a fixed amount of real, physical gold. Nixon ended that. From that day forward, the dollar was backed by nothing but trust. Trust in the government. Trust in the system. And to a man like Bunker Hunt, a man raised to fear paper, that was terrifying. He wanted something real, something he could hold in his hand, something no government could print, no bank could devalue, no signature could erase. He wanted silver. But Bunker didn't want a little silver. He wanted to own enough of it to control its price. In 1973, Bunker Hunt began buying silver. Not coins, not jewelry, not little certificates from a bank. Real silver bars, stacked in vaults, weighed by the ton. At the time, silver traded around $2 an ounce. Bunker and Herbert started buying, quietly at first, then aggressively. They weren't gambling. Most traders bet on price movement and exit fast. The Hunts did the opposite. They bought, and they kept buying. They never sold. By 1974, the Hunt brothers owned an estimated 55 million ounces of silver. By the late 1970s, that number would grow far larger. To put that in perspective, at one point, the brothers held more silver than the United States Treasury. But owning silver wasn't enough. The Hunts wanted leverage, a way to control even more silver without paying the full price up front. So they turned to something called the futures market. Here's how it works. In the futures market, you don't have to buy the metal itself. You can buy a contract, a promise to take delivery of silver months later. And here's the trick. You only put down a small fraction of the price up front. The rest is essentially borrowed. This is called buying on margin. It's powerful. It can multiply your gains many times over. But it's also a knife with two edges. Because if the price moves against you, the same leverage that made you rich can destroy you in a single afternoon. Bunker didn't think about destruction. He thought about scale. By 1979, the Hunt brothers and a small circle of allies, including wealthy investors from Saudi Arabia, had quietly built up silver futures contracts representing nearly 200 million ounces of metal. They weren't just betting on silver going up. They were trying to corner it. To corner a market means to gain such control over a commodity that you become the one who decides its price. It is one of the oldest schemes in financial history, and one of the most dangerous. Throughout 1979, silver began to rise. In January, it traded near $6 an ounce. By summer, it had crossed $8. By autumn, it was above $16. And the more the Hunts bought, the higher silver climbed. The higher silver climbed, the more nervous the market became. Other investors rushed in, hoping to ride the wave. What had started as one family's hedge against paper money was becoming something much larger. A global stampede. By December 1979, silver crossed $30 an ounce, a level that just a year earlier would have seemed absurd. The Hunt brothers' silver holdings were now worth several billion dollars on paper. And still, they did not sell. For Bunker Hunt, this was no longer about wealth. It was about power. He told friends more than once that the world's monetary system was broken and that silver, real silver, was the only honest store of value left. He genuinely believed he was saving his family's fortune from collapse. What he didn't understand, or perhaps refused to admit, was that the very act of cornering silver was creating the collapse he feared. In January 1980, silver hit $50 an ounce. 50. In just over a year, the price had risen more than 700%. Across America, ordinary families rushed to cash in on the boom. People dug out their grandmother's silverware, actual dinner forks and spoons, and lined up at jewelry stores to sell it for cash. Photo studios couldn't afford film. Dentists couldn't afford fillings. Anything that depended on silver was suddenly a luxury. The Hunt brothers had set off a chain reaction across the entire global economy. And in their Dallas office, Bunker and Herbert Hunt looked at the numbers and felt something close to invincibility. But invincibility is the most dangerous illusion in finance. And the people who run the world's exchanges had been watching the Hunts very, very carefully. In New York, there is an exchange called COMEX, the place where most of the world's silver futures contracts were bought and sold. Think of it as the stadium where the silver game was played. By early 1980, the people running COMEX had a serious problem. The Hunt brothers, along with their partners, controlled so much silver, both physical bars in vaults and futures contracts on paper, that the entire market had become unstable. Because here's what nobody outside the exchange wanted to admit. If the Hunts demanded delivery of all the silver they were owed under their contracts, the market simply could not provide it. There wasn't enough silver above ground anywhere in the world to fulfill the obligation. This was no longer a market. This was a trap, and someone was going to be crushed inside it. On January 7th, 1980, COMEX made its move. The exchange announced an emergency rule. From that point forward, no single trader could hold more than a limited number of silver futures contracts. Existing positions had to be reduced. In other words, the rules of the game were being changed in the middle of the game. Bunker Hunt was furious. He believed COMEX was protecting its own, wealthy traders who had bet against silver, who would now be saved from massive losses. He believed the system was rigged against him. What Bunker didn't see, or refused to see, was that the system wasn't protecting individuals. It was protecting itself. Because if the Hunts were allowed to corner silver completely, the collapse that would follow could threaten the entire global financial system. COMEX wasn't punishing the Hunts. COMEX was containing them. Silver, which had peaked at $50 an ounce, began to slip, first slowly, then faster. And then everything began to come apart. By mid-March 1980, silver was falling fast. From its peak of $50, the price dropped through $40, then $35, then $30. And with every drop, the Hunts' problem grew uglier. Margin calls. Remember that small deposit they put down to control all those silver contracts? When you buy on margin like that, your broker keeps a minimum balance to cover potential losses. As silver fell, that balance kept shrinking, and the brokers started demanding more cash. Not in days, not in weeks, in hours. On March 14th, the Hunts faced a margin call of $10 million. They paid it. On March 17th, another call, larger. They paid it. On March 19th, another, and another, and another. The brothers were burning through their cash at a speed no private fortune could sustain, even theirs. Behind the scenes, Bunker Hunt scrambled. He flew to Europe, trying to arrange emergency loans. He approached banks, foreign governments, even Arab investors. He offered land, oil rights, anything. But the world had figured out what was happening. The Hunt brothers were no longer feared. They were exposed. On March 25th, silver dropped to $21. The Hunts owed money everywhere. Their broker, a major Wall Street firm called Bache, Halsey, Stewart, Shields, was now in danger of going under itself. If the Hunts couldn't pay what they owed Bache, then Bache wouldn't be able to pay what it owed everyone else. And if Bache fell, the shockwaves would hit dozens of other Wall Street firms. It was no longer just a Hunt family problem. It was now a threat to the American financial system. And then came Thursday, March 27th. Silver Thursday. The day the silver market broke. The market opened at $15 an ounce. Within minutes, it dropped below 12, then 10. By the closing bell, silver was trading near $10.80. In a single trading session, the Hunt brothers lost over $1 billion. They couldn't pay their margin calls. They couldn't raise emergency cash fast enough. Their broker, Bache, was hours away from collapse. And then America's central bank, the Federal Reserve, for the first time in modern history, quietly stepped in. Not to save the Hunts, to stop a single family's debts from dragging down the rest of the financial system. In Dallas, in their penthouse office, Bunker and Herbert Hunt stared at the screens. They had walked into 1980 as the richest brothers in America. They walked out of March owing more than $1.5 billion. The empire was finished. They just didn't know it yet.
In the weeks that followed Silver Thursday, a group of major American banks, under quiet pressure from the Federal Reserve, extended a $1 billion loan to the Hunts. It was not a rescue out of charity. It was damage control, a way to slowly unwind the Hunt family's massive silver positions without breaking the rest of the market on the way down. In return, the brothers had to surrender most of their silver, sign humiliating agreements forcing them to disclose their finances, and accept government oversight that would last for years. In 1988, 8 years after Silver Thursday, Bunker Hunt and Herbert Hunt filed for personal bankruptcy. Bunker Hunt, once one of the richest men on earth, listed personal debts of nearly $1 billion. He sold his racehorses, his art collection, his coin collection, even his stake in the family's oil business. And yet, the Hunt brothers maintained for the rest of their lives that they had done nothing wrong. Bunker would say, more than once, that he had simply been buying a metal he believed in, that he had been punished for being too successful, that the system had turned against him. The U.S. Congress disagreed. The agency that watches over commodity markets disagreed. Decades of new rules and regulations, many of which still shape commodity trading today, disagreed. The Hunt brothers were not the first men in history to try to corner a market. They will not be the last. What makes their story endure is not the scale of their wealth or the size of their fall. It is the question they leave behind. Were they criminals? Or visionaries who simply believed too much in something real? Were they manipulators? Or men who saw the weakness of paper money before everyone else did? History has not made up its mind, and maybe it never will. But this much is true. Some empires don't fall to enemies. They fall to ambition. Every fortune has a price. What do you think? Were the Hunt brothers manipulators or visionaries who played the game better than anyone else? I left the question open in this video, but I'd love to hear your answer in the comments below. If you enjoyed this story, subscribe to Golden Ruin. Every Friday we tell another one, the financial moves that shaped history and the men who paid the price. I'll see you next week.